Eminem Finance, I think, has been reading below the 200 moving averages in quite some time, and the stock had shown signs of some consolidation as such, but that consolidation has not resulted into a uptrending mode. In fact, the stock is going further into a drag kind of a mode. The 50-day moving average has started to slope down for M&M Finance. So I think if the stock is unable to recover over the next couple of days and very quickly and very sharply, then I believe that the near-term prospects for M&M Finance could get a bit more dented. I would suggest that if you're looking to buy the stock, then wait for a confirmation of 200-day moving average for M&M Finance. I think if that level is around 165 or 170 for the stock. So if the stock manages to cross those levels, then I would suggest that you can look to buy the stock at the breakout point.
Okay, Saurabh, I want to come to you on this, and this is Reliance Industries, the stock that we're talking about. Soumitra Joshi, I think, has a question that a lot of retail investors will be slightly wary about. If we're talking about the new businesses that they have, the retail business and everything else that they're creating, assuming, of course, that it actually comes to pass, there is this buzz about listing them separately. What happens, one, to the new businesses? Can we assume that a retail investor would get, or a minority investor would get allotment in the new companies? And what happens to the holding company then, which will effectively be what Reliance becomes at that point? Does it retain its value?
I think these things will get clarity when these schemes will be declared by the company. But all in all, one thing is very much clear, that the company is going to list its either retail arm or its oil and gas business, and that is why that is what Street is looking for. And I think value unlocking will surely be there with the Reliance industry, because it is a story which will continue for years. And I mean, the way the company is going, the way the company is acquiring companies and the new age technologies, the new age businesses, and the growth they have charted out for the future in the next 2, 3, or 4, 5 years is actually going to handsomely rewards its shareholders.
All right, this one is coming in from Tony Joseph, saying that he wants a technical view on Excel Industries. He has a time frame of about 3 to 6 months in mind. He's bought this particular counter at 1,275 rupees per share. Kunal, what's your view on Excel Industries?
Well, again, like many of these mid-cap names, even this stock is going through a corrective phase. The viewer, I think, seems to have bought at the extreme high levels of the near-term trends for Excel Industries, and the stock has corrected from those 1250, 1270 levels to 1160, 1165. And I think, if I'm not wrong, it's also confirmed a break of its previous major support, which was at 1180, 1185 for Excel Industries. So a stock which now looks to be confirming more of a downtrend. I would suggest that if you can exit the stock, if you get a minor rally towards, say, 1180, 1185, which is the breakdown point for the stock, I think that could be a better point to try and look to exit the stock, and then wait for better levels on the downside to try and enter it back again.
Okay, coming to you, Saurabh, on the long-term view for Welspun India, we've got Surya, who's got in at levels of 128 and is looking for a long-term advice for the long term.
I think it is a very good stock to hold on. The way the company is, it's into the textile business, and the export story is looking quite good. I mean, the Europe market is doing well for the company. The US market is also doing well for the company, and the recent policy, which has been, the announcement by the government, is actually going to boost up the margin. That is what we are. That is why we are seeing, good amount of buying interest coming in the textile stocks, and Welspun India is in the textile packet is one of the best pack, and I'll recommend a hold for a year or two, and I think he'll be the shareholder will be rewarded extremely in a beneficial way.
Okay, this one is coming from Zafar. He's saying he's already holding some of BPCL shares, which he purchased at 475 rupees per share. He wants to know whether he should go ahead and add some more of BPCL in his portfolio. Kunal, what's your take? Does it make sense for Zafar to actually accumulate some more of BPCL, and what should he do with his current holding?
So I think if it's related to longer term investments, then I don't suggest an averaging kind of an opportunity over here. The stock is still going through a correction. I think if I'm not wrong, the last 5 weeks on a trot, the stock has gone through a corrective phase, and from 485 or 500 levels, it's come back to 450 zone. But the correction seems to be not getting over. In fact, yesterday, for example, you had many of these OMCs rallying up, but today the rally seems to have faded down for these names, which means that they could be in line for one more round of correction. So if you're looking to average, then I would suggest maybe you look out for levels closer to 425, 430 range. I think that could be a much better range for you to look to average out further, specifically if you're looking at it from a short-term trading view.
Okay, there is another question, and this is from Yash on the strategy for BPCL, and he's talking about beyond 1 year. I do want to take it across to you as well, Saurabh, because the latest update is that the share sale in BPCL might actually be put on the back burner. What does the retail investor have to bear in mind if that does happen?
The stock got re-rated because of the divestment only. If you compare it, the valuations with that of the Indian Oil Corporation and the Hindustan Petroleum, the stock will look expensive. and I think if the thing doesn't get materialized the way the market was thinking for, I mean, the disinvestment process, if put on a back burner, may see adverse reaction on the stock prices, and I think the stock can react adversely.
All right, this query, the next query that is coming in is actually from Meenakshi, saying wants to know short-term view on Engineers India. The purchase price is 86.77 rupees per share. Also wants a view on Nazara Tech, but given the Nazara Tech is a very recent listing, I'm doubtful, Kunal, you will have a view on that. So what's your view on Engineers India? She's bought it at about 86.77 rupees per share.
So I think I would first of all not recommend to average out further at current levels. I think if I'm not wrong, today the stock is confirming a break just below its 200-day moving average. The last 2 months of trends for Engineers India has also been very sharp on the on the downside. In fact, if I'm not wrong, right from the time when the results were announced for the previous quarter, when the stock was at 83, 85 odd levels, from there on the stock has gone through a corrective phase. The concern with the near-term chart is that the break of this 200-day moving average on the downside could actually lead to some bit of more, aggressive selling pressure for the stock. So, would not suggest an average at current levels. And probably if you're looking to exit, then I believe if you get a chance to exit the stock closer to 80, 82 levels, that could be a better exit point. And then wait for the stock to cool off and the trends to settle back for you to buy back again.
Okay, coming back to you, Kunal, on this one, we've got Reena who's asking about SBI. She's got a 430 July call, and she's asking why the stock is down. I guess it is because of the broad-based selling, but specifically, what would you say about this particular contract?
So yeah, SBI is down because of the pressure which you're seeing into the banking names, as well as the broader selling which is happening into the markets. Now it's difficult to anticipate that how the results and the other outcome could probably play out for SBI. But when you do a relative study analysis, then SBI stands out to be one of the strongest stock from the large cap banking space. So whether you try and compare this with the large cap performers like Kotak Bank or HDFC Bank, SBI seems to have outperformed them, and it's been in line with the other large cap peers like ICICI Bank, Axis, etc. In the last few months as well. So I believe that it's a strong stock. The near-term trend for the stock, of course, looks to be a bit tricky because of the overall market situation. But if the banking index goes through a corrective phase, so if I'm expecting, as I said earlier, I'm expecting some more correction to come by into the banking index. If that happens, even SBI could go through one more round of correction. So I would suggest that wait and watch. Closer to 400 levels is a huge support for SBI, and from there itself, last time around, we've seen a major bounce back shaping up for the stock. So if you happen to see the stock back at those 400 levels, that could be a good entry point.
Okay, this one is coming from Sudeep, and he's saying that he has Karnataka Bank, which is purchased at 118 rupees per share. He's saying this private bank has been rumored for is a rumored acquisition for candidate in the past, but can it be averaged at current levels? Saurabh, I'll come to you with this particular query. How does Karnataka Bank actually look over the longer term, and if somebody wants to average at current level, does it make sense for that person to do so?
I think this is the rumor which has been there for years, and I think no taker has been seen for the Karnataka Bank. If you look at the balance sheet, it's a small size bank. I mean, I won't recommend investing in Karnataka or averaging it for the matter. In fact, when the banking per se, when the banking sector per se is not performing, I mean, the credit growth is actually not happening, and even the larger banks are, are seeing, very minuscule growth for that matter. So I would, if you want to stick with the banking names and in the mid or small size banks, I would rather recommend to you shift your money in the public sector banks. For example, the Indian banks, which is a very good strong balance sheet and has done 2 QIPs and has a good capital adequacy ratio and low NPS. So I would recommend to switch over to Indian Bank.
Okay, this next one is also for you, Saurabh, and this is Andhra Sugar, which Sunita has bought at levels of 322. She's looking for a long-term view. Would you prefer this counter, or would you prefer something like a Dhampur up north? And I'm asking about the UP-based sugar companies.
I think Dhampur Sugar will any day be a better choice because of the way the company is looking at tapping the growth opportunities, the way the company has integrated its business, and the commodity cycle and the ethanol blending looks very promising. So I think it would be any day better to shift money to the Dhampur Sugar.
This one is coming from Bharat, saying that he has IDFC First Bank, 130 shares of that particular counter, which he's purchased at 55 rupees per share. He wants to know whether it is good time to accumulate some more. Kunal, what's your take? IDFC First Bank makes sense to accumulate some more?
Which you can hold on to it from a longer term view. There are no two doubts about it. But as I said earlier, that in many of these banking stocks are going through their routine correction phase. So if that happens, even IDFC First Bank can come back towards testing its 200 moving average. That level is around 47-48 mark for the stock. So if you're looking to average, then I think a better entry point would be closer to that 47-48 mark, which would be the 200 moving average. That could be a good mean reversion point for IDFC First Bank, and hold on to it from a more of a longer term view. I think that could play out to be a much better strategy for IDFC First Bank rather than looking at it from a very short term view.
Okay, we've got so Snehashish is asking about Interglobe Aviation, and 1800 is the buy price and 25 shares. Should they hold on? I'm going to go across to Saurabh on the fundamentals, because that's where the question lies. At a time when a large part of the world had opened up, again you had the Delta variant play spoilsport. You see what's happening in the markets so far this week. Can you anticipate a turnaround for the aviation business? I know they've reduced the cash burn to a large extent, but there's still concerns because that's a sector that has been hit very badly by the COVID-19 pandemic.
I don't think so. Travel and tourism will return to normalcy anytime sooner. I mean, maybe if you think that things will return to normal in a quarter down the line or 2 quarters down the line, I don't think so. This will happen. Especially these companies have to see good amount of utilization rate, especially when the ATF cost is on the rise, and the utilization rate should improve. And I don't think so that will happen, especially when the Europe, in the UK itself, the daily number of cases are rising. There are concerns with which markets are reflecting because of this third wave crisis and the growth concerns. I don't think so. The time is that the time would change for the travel and tourism companies. So my take would be negative for the aviation and tourism sector per se.
Okay, this one is from Anuradha saying that she has Force Motors which she's purchased at 2,192 rupees per share. She wants to know whether she should average at the current price, which is around 1,500 rupees per share, and she wants to know whether she can hold on to the counter for the next 1 to 2 years. Kunal, what's your advice to Anuradha on Force Motors?
Yeah, I believe from a longer term play, it's a good stock. I think recently the stock has given a breakout. But then what had happened was, Cheryl, that we were discussing this point earlier as well, that many of these stocks in the last 1-2 months have risen up, more than 30, 40, 50%. And in that rise, many of these indicators have got back into overbought territories for these stocks. Now, when you have, for example, for Force Motors, an RSI which is in the tune of 75, 85 kind of levels on the daily time frame, it doesn't augur very well to initiate a fresh buy at those levels, irrespective of how strong the momentum is. So purely on that aspect, I believe short term wise, you may go through a bit of a corrective phase for Force Motors. Let the stock cool off to, I think, 1350 levels. That could be the first strong support which the stock may encounter on the way downside. So if the stock happens to come back to that level, I believe then it could offer some good opportunity and a much more better and a balanced risk reward rather than buying at current levels.
Saurabh, Manohar is asking about ONGC, and this is a counter that of course fluctuates with oil prices. What do you have to say about buying into this counter though? Saurabh, can you hear me?
Loud
The question is about ONGC.
I mean, there is always value which looks.
So the question is about
ONGC. If you look at the current prices, they are at the current price. It looks that the ONGC is pricing crude around $50 per barrel. When the crude started rising, it looked that the ONGC will also perform well, and especially when the gas revision prices are on the anvil, which will also boost the profitability. But the way stock has performed is actually, actually in contrast to the thought. And I think if the stock is underperforming, there is no point in keeping the stock in the portfolio. I would rather recommend when the way the crude prices have reacted after the OPEC meeting and I don't think so the stock will perform. I would rather suggest to switch money from the oil back to maybe real estate or infrastructure stocks, which are expected to do well.
This query has come from Santi, and this is on Cheviot Company, which actually manufactures jute goods and products, saying that the stock has seen a massive run up from May onwards. It's trading about the 50 DMA levels. They've also given a dividend payment of about 175 rupees per share. So wants to know that if someone wants to invest in Cheviot, does it make sense at current market price? Also, fundamentally, does it have a good growth story over the next 2 to 3 years? Saurabh, what's your take on Cheviot? Do you cover this particular counter, and would you be able to help with your views on how the growth story looks for Cheviot? And if one needs to buy, can that person look to buy at current levels?
I would not be comment on this stock. It's not been in our coverage.
All right, Kunal, would you want to take this on the chart for Cheviot? How does it look? If in case you track the stock.
I don't track the stock as such regularly, but then I was looking at the charts as such for Cheviot, and as I mentioned earlier, that last 2 or 3 months we've seen many of the stocks giving you returns of 2x and 3x. Cheviot is a stock which has also gone through a very similar kind of a fate, where from 700 levels, I think end of April and start of May, the stock had rallied up to almost 2000 levels, which it tested this month. So now from 2000 levels, it's going through a corrective phase. The first support point where the stock has been bouncing back is the 50-day moving average, which means that yesterday's low around 1400 mark could be considered as a good short-term support. I would suggest a buy on dips or an averaging on dips opportunity over here, and wait for significant amount of corrections on the downside. You don't need to jump into the stock just with every 10, 15, 20 rupees on the downside. So I think start off with 1400 as a first level where you can look to start nibbling in, and then probably wait for maybe another 150 or 200 points on the downside, because if the stock goes through one more round of corrective phase, the second round of correction could actually take the stock back towards 1200 or sub 1200 levels. So I would suggest a bar and dips approach. You can start at current levels.
Gentlemen, just reminder, keep your answers a little shorter. Let's try and slip in as many as possible. Sagar is asking about Godavari Power and Ispat. Bought 750 shares at 610, booked partial profits of 250 shares and got capital back. Should they continue to sell or hold their 500 shares is the question, Kunal.
Well, I don't track the stock, Alex, so won't be able to offer any comment on it.
Okay, fair enough. Very quickly then, Saurabh, do you have coverage on Godavari Power?
I would rather recommend to book profit on this stock.
Okay, this one is coming in from Madhusudan, 40 shares of AstraZeneca, which is bought at an average price of 4,230 rupees per share. Should I cut my losses and sell, or should I hold and buy some more to average out the price? Kunal, what's your take on AstraZeneca? What should Madhusudan do?
Well, I think you can hold on to your investments. The stock is a very, very low beta stock. Liquidity is also a major concern for AstraZeneca, and the average trading volume for the stock at times is just about in 10,000s, 5,000s odd. So I think that's the bigger concern for the stock. But it's going through a consolidative phase. It may take maybe another couple of months for the stock to just about consolidate below the 200-day moving average. But I think if time is not an issue, and if you're not in from a short-term view, then I believe that you can hold on to your investments over here. Once the breakout happens, if and when the breakout happens about 200-day moving average, I believe that the stock should see a substantial upside post that.
What do you have to say about Gland Pharma? Padma is asking whether to buy for the short to medium term.
I think it's been a fantastic stock. Gland Pharma done reasonably well, even though it's very, very recently listed, so I don't have too much of chart history as such. But then looking at the last 3-4 months of price patterns, it's done phenomenally well. I think if I'm not wrong, perched at 3,800 levels or just about around that 4,000 mark. So it looks very attractive, and I think these are classical candidates where you can use any kind of a short-term correction, short-term dip as a good buying opportunity. So you can start, for example, at current levels, and if the stock happens to correct by say another 200 rupees on the downside, then look at this 200 point corrections as good step-by-step way in which you can average it out further.
Okay, this one is coming from Mahesh, wants to know whether it makes sense to invest in Kotak Mahindra Bank at current market price for the longer term. Saurabh, what's your take on Kotak? Makes sense to invest right now for the longer term, or should one wait for a correction?
I would rather recommend to invest money in ICICI Bank rather than Kotak Bank.
Okay, fair point. Saurabh, coming to you on this one, Srinivas is asking about 5G and the prospects for Hathway Cables. Would you pick this counter, or would you pick another of the telecom players?
Hathway, the company is doing pretty well. If you look at the numbers, the company is posting good set of numbers, and I think the stock can perform well in the quarters to come.
All right, now time for the high risk and low risk ideas from both of our experts. Kunal, first to you. What's your high risk and low risk ideas for the viewers today?
Nothing is low risk in this kind of a market, Cheryl. So I will go with a couple of high risk and moderate risk ideas. First one is a buy on Asian Paints. Now with the crude fall, crude selling off, I believe it could be beneficial for a stock like Asian Paints, and it's been perched pretty well above the 50-day moving average. Very low beta stock in that sense. So I would suggest a buy with 3,200 as a target and stop loss at 2,900 for Asian Paints. And the second stock which I would suggest would be a buy on ITC. Now with the markets going into a bit of a volatile and a choppy mode, I think the defensives could probably make a comeback again. And ITC is a stock which has started to pick up pace in the last 3-4 days. So I would expect some stronger continuation move on the upside. Buy with a target of 220, stop loss at 200.
Okay, for all those of you who've not had your queries answered, please allow us to do so on Thursday. We'll be back with it at that time. But coming to you, Saurabh, on your high risk and low risk ideas?
With low risk ideas, first would be Larsen and Toubro. The company has improved. We have seen the improvement in the execution in the March quarter. there is a good amount of visibility in terms of order book. They have order book of about 3.25 lakh crore. I expect that the execution and the both order intake will improve, especially when the government is able to garner a good amount of taxes. The national infrastructure pipeline, at which the government is going to spend a huge sum of money in the next 5 years, will augur well for the company. So we are expecting a target of about 1820 rupees. The next stock I would recommend is from the real estate pack, the Bangalore-based developer, largely it's a Prestige Estate, three-decade-old company, having working in both residential and the commercial segment. They have done a deal with the Blackstone, through which they have been reduced their debt from approximately 8,000 odd crore to 1,800 crore, and it would be a debt-free company in the next 3-4 months. They have a good amount of project pipeline going forward. The sales have been pretty much good in the March 21, and it is expected, the company is expected to post good set of sales numbers in the current fiscal year. We expect this stock to see a price target of about 400.
All right, with that, we come to the end of the query segment. Thank you, Kunal, as well as Saurav, for joining us on the show, giving us your take on HCL Tech, sharing with us your ideas, as well as resolving viewer queries. And for all the viewers who've tuned in today, thank you for tuning in to Buy Now, Sell Now. Like a reminder that Alex just gave, tomorrow we wouldn't be live on YouTube, but definitely we'll see all of you all on Thursday. But now, time for a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side, so don't go anywhere.
More.